All right, guys. What I want to do now is we got to get moving, and it's all my fault, not yours. So just bear with me and just follow whatever I'm going to be doing here. I need you to open up chapter 2 slides, and I need you to go to slide 17. Okay. And we've been working on journal entries, and then every journal entry problem has told you to do T accounts and trial balance. And we haven't had a chance to go over them. So that's what I'm going to do now. So I'm going to give you guys a minute to go ahead and get your chapter 2 slides open and go to slide 17. All right, now that you got your slides open to chapter 17, what I want you guys to do is I want to first start off by saying now, for those of you that are accounting majors, you guys, and most of you guys will never end up using a T account in your life. Unfortunately, with the way accounting is, you have to learn the background to be able to know if the computerized systems are doing it right for you. So you do need the background on why certain things happen. Journal entries are something that we do to this day in accounting offices, so that is something that you're going to need to know. But the T accounts, when you're working with software, are pretty much done for you. And again, the T accounts is a very simple thing. Okay, this slide, if you look at the very bottom, it has a template of what a T account looks like. It's just a T. At the top of the T is the name of the account. The left-hand side is your debit side. The right-hand side is your credit side. Okay, so it's not anything spectacular. It's not rocket science or brain surgery. All right. The T account's used to summarize, meaning it put everything together. All the transactions made to a single account. For each account, there's a T account. Okay? So that's what I want you to pay attention to. There's 3 parts. The title, which is the account name. There's the left-hand side, which is what we call our debit side. And then we have the right-hand side, which is called our credit side. Nothing crazy with that. Okay? Moving on to 18, slide 18. Once you've done your journal entries, you have to post them into what we call the T accounts. And every different account that you use will have a separate T account. Okay? It will all have a separate T account. So you can see here that what you're going to do is you're going to go ahead, and what I want you to take a look at quickly is take a look at 19. Okay? Now, if you go and look at the cash T account, you'll see that on January 2nd, it had a debit of $40,000. So if you're debiting cash for $40,000, that means your cash is going up. So what I want you to flip back to is I want you to just jump back to slide number 10 and take a look at the actual journal entry that you recorded on slide number 10. And you can see at the bottom, it said January 2nd, cash debit for 40. And then you had a credit to common stock for 40. So that's the first journal entry that we would end up being, that would have to be posted. So now if you go down to your T accounts, look at on slide 19, look at cash. You have January 2nd, you have a $40,000 debit. The other account that you used was common stock, and that was a $40,000 credit. So if you go and find your common stock account, T account, it's all the way at the bottom right-hand side, you see that it has a credit on January 2nd for $40,000. So really what you do is you take all your journal entries and you put them into these T accounts. So for instance, that was January 2nd. The next journal entry that we had was on slide 11, and slide 11 said, on January 21st, you purchased supplies for cash in 300. So right there, if you go back to 19, you know that your cash went down, and you show cash going down with a credit, which is why you see on your T account, cash on the 21st is $300 on your credit side. And then you purchase supplies, which is an asset, and that goes up with a debit, which if you look at your supplies T account, you'll see that on January 21st, it's got a debit for $300. You will do that with all of your journal entries. Every one of your journal entries, you would just go down and redo it into these T accounts. Okay? Once you get to the end of those T accounts, once you get to the very last journal entry that you put into T accounts, that's where you're going to have to stop. Your next step is to go along the T accounts. Okay? And I just want you to look at, let's go with the ones that only have one thing in them first. So accounts receivable, you can see only has one one thing in the T account. So you would circle $12,000 because that is your accounts receivable balance. You have a debit balance in accounts receivable for $12,000. You would do that with all the ones that have one entry in each one. So that would be accounts receivable, prepaid insurance, your truck, dividends, fees earned, common stock. You can see they all have one entry in each one of them. Okay. So those are the ending balances for those. Now, if you take a look at supplies, I'm going to hold off on cash for a minute. Take a look at supplies. We have no credits. There's nothing on the right-hand side under the supplies count. We have two debits. We have one on the 21st and we have one on the 2nd of February, 300 and 600. So when you do, what you do now is you're going to add up both sides. So on the left-hand side of supplies, you see that 300 and 600 equals 900. There's nothing on the credit side. So that's going to be a big goose egg, a zero. So your supplies account has a balance of $900 in it at the end. Okay. Same thing if you look at accounts payable. February 2nd, we had a credit for 600, and November 3rd, we had a credit for 34,000. If you add those two up, that will give you your credit balance. Now, take a look at the cash count because this has some on both sides. When an account has items on both sides, meaning both left and right or debit or credit, you're going to add up each side individually. So hence the reason why you see on the left-hand side of that box, it has a $40,000 amount. And then right next to 40,000, you have 10,100. That 10,100 is those four credits added up. So you have $40,000 debit, you have 10,100 credit. To figure out your balance, obviously you have more on the left than you do on the right. So you take your left-hand side of 40 and subtract the 10,100, which leaves you a balance of 29,900. Okay? That is what your balance in your checking account or your cash account is going to be. In accounting, checking and cash is the same thing. So in this case, you have a balance, a debit balance of 29,990. The thing that I would suggest that you do when you do this is you circle all your totals. So you put a circle over the 29,900, the 12,000, the 9, the 300, and so on and so forth. That's all there is to T accounts, is that part there. The next step that your questions have been asking you to get into is what we call our trial balance. Now, the one thing I want you to think about when you hear the word balance, you should automatically say it should equal out. Okay, so if you go on to slide 20, which is the next slide after your T accounts, slide 20 is going to talk about our trial balance. Now, the trial balance is done after all the journal entries have been done and the T accounts for every account has been done. If you have not finished your journal entries, you can't do your T accounts. You do your journal entries first, then you do your T accounts. The trial balance is simply just a list of those accounts. It's just going to list them from top to bottom. Okay. Now, the whole purpose, as you can see there in dark print of the trial balance, is to make sure that your debits equal your credits. If your debits don't equal your credits at your trial balance, you've done something wrong. And that's going to be your first indication that you've got something going on that you need to pay attention to. When you guys prepared your income statement, statement of retained earnings, and your balance sheet on your first exam, you guys were given a list of accounts with totals. That, in essence, was your trial balance. Okay? I didn't set it up that way because I didn't want you to hear that terminology yet. But that is, in essence, of what you had, was a trial balance given to you to complete your financial statements. So the journal entries, the T accounts, and the trial balance are all done prior to you doing your financial statements, the ones that we've learned. And that's why journal entries are so very important. Okay. So purpose is that your trial balance has to balance. Now, I want you to skip down to slide 22 for a quick second. And slide 22 is a template of what a trial balance will look like. It's very simple. It is very simple. You have your 3-line heading. You have the company name, you have the words trial balance, and then you have the date of the trial balance, December 31st. Okay? So that's your dating. Now, there's literally 3 columns on a trial balance. You have the ones that have your accounts listed on there, and then you have a left and a right-hand column. Now, when you're doing a trial balance, you write your journal entries in a specific order, and they go in order of the ALSDRE. So if you take a look at your trial balance here, ALSDRE standing for assets, liabilities, stockholders' equity, dividends, revenue, and expenses. 1, 2, 3, 4, 5. The first 5 accounts there, cash, accounts receivable, supplies, prepaid insurance, and truck, they're all asset accounts. They are all asset accounts. Okay? So you list them in ALSDRE form. They go from the assets down to your expenses. So we have the first 5. The next one, accounts payable. Well, anything with the word payable is a liability. Anything with the word payable also has a credit balance. Now, if you look back to your T accounts, you'll see, go to your cash account. Your cash had $29,900 left in it, and that was a debit. So when you prepare your trial balance, you prepare it as cash having a debit for the amount that's left. If you look at your accounts receivable, you had $12,000 debit. Well, if you look at your trial balance, your accounts receivable is listed as a debit because the amount is written in the debit column, or in other words, the left-hand column. Same thing with the other assets. So one of the things that I tried testing you on to get you guys to know is that you have to be able to tell me what account is, what type of an account it is. If I say inventory, you should know that inventory is an asset account. If you go and put it somewhere else, it's going to mark things wrong and it's going to get you all messed up. So it's imperative that you guys understand that the whole classification aspect of being able to tell me what type of account something is important. Same thing was as if you had to tell me it had a debit or credit balance. How does it go up and down? Meaning cash has a normal debit balance, but it goes down with a credit. Okay? You never want a credit balance in your cash account because that means you're overdrawn. So the key here is that you have to understand the debit, credits, and the ALSDRE. If you don't, then we're severely, severely backed up. Okay? So as you can see, accounts payable is a credit because it's a liability and it's part of your losers. Okay. Next one is common stock. That is part of stockholders' equity, which has a credit balance. Then you have, then you have dividends. Dividends is a debit. Okay. It's part of the ADE rules. Has a debit. So hence the reason why it's listed in the debit column. Then the last 2 items that you have are your revenue and expenses. Now, your revenues would have a credit balance, okay? And like you see in the video, have a credit balance. The expenses, if there were any, there's no expenses listed on this trial balance right now, but your expenses would have a debit balance, and they would be listed at the very bottom of your trial balance, just like they're listed at the very bottom at ALSDRE. Once you have all your accounts listed and the amounts that are respectively listed along with their items, you would go ahead and add up in both your left and your right-hand side columns. Now, either way, your left and right-hand columns should add up to the correct number. In this case, they both add up to $86,600. That is important to understand because if it does not balance, then either A, you've written the wrong number down, B, you've put the right number in the wrong spot, or C, you've put the wrong number in the right spot. All right? Or you transposed the number, or you did something. But the key here is that if your trial balance does not balance at the end of it, then you have a problem that you need to get fixed. Okay? This isn't, again, brain surgery or rocket science. It's something that is it's very easy to do if you just put your mind to it. Okay? So what I'm going to do is I'm going to post this up real quick. And I'm also going to put up a Excel spreadsheet with journal entries that I personally have already done. And I'm going to do a problem with you. And I want you guys to try to follow along as best as you can to what I'm going to be doing. I'm going to be setting up a T account for each one of the accounts that we just did, so that this way you can go ahead and actually put it into proper form. Okay, so I'm going to stop the video here. I'm going to get the next one going and get it up there. The next one I will send out directions, or I will put directions with it on the link for it. Okay, so we're going to go ahead and stop this one, and I'll be right back to you.